secret creator of Bitcoin may have just been revealed. HBO just released a documentary called Money Electric, where they claim to have uncovered the true identity of Satoshi Nakamoto. I watched the entire movie the moment that it dropped, and it made some strong claims that this man, Peter Todd, created Bitcoin. Basically, he's this child prodigy whose father was an economist and his mother taught him coding and cryptography. HBO claims that Peter Todd created Bitcoin at the age of 22. However, he took to X right after the movie was released and completely denied all of this. But in the documentary, they also imply that this guy, Adam Back, the creator of eCash and early attempts at Bitcoin, may have also been involved. And if you watch the movie, pay attention to how sus he acts every time they talk about it. It was just so crazy to watch them confront these guys on camera. It was so uncomfortable. But who do you think created it?
No, I think the idea behind Bitcoins was to digitally replicate gold, kind of a gold standard for the internet. Gold 2.0, as some people have alleged. And if you look at Bitcoins, the way they come into existence is that they're mined, just like actual gold. You mine them into existence. And just like mining gold, when you mine for Bitcoins, you actually expend real resources, real energy. There is a cost associated with creating a Bitcoin, just like there is with gold. In contrast to central banks that create pretty much limitless amounts of currency for nothing, out of thin air, at virtually no cost. And also, like gold, there is a limit, there is a scarcity in that there are only 21 million Bitcoins that can be mined into existence. I think right now there's maybe around 11 million. So there's still more that can be created, but again, it's going to cost money to do so. And also, like gold, Bitcoins are divisible. You can take one Bitcoin and make 100 million fractional Bitcoins that collectively would have the value of a whole coin. But the idea is that you can break your Bitcoin up into smaller increments for transactions, just like gold. You can have an ounce of gold, then you can have a half ounce, you can have a tenth of an ounce, and you can make smaller quantities that are more ideal for transactions. But unlike gold, you can instantaneously, you can send your Bitcoin over the internet. You can't do that with gold. You can't transport gold because gold actually has substance. Bitcoins exist in cyberspace. When you have gold, you have to protect it. It could be stolen. You have to guard it. Maybe it costs money to store it. You have none of this. It doesn't cost you any money to store your Bitcoins in your digital wallet. So Bitcoins really replicate all of the properties of gold, even improving on some of them.
Call the date specifically.
It's very misunderstood. People think it's debt. It's convertible debt. It's unsecured. No recourse.
No recourse.
What that means, Ron, is that Bitcoin could go from $100,000 to $1,000. The debt's not getting called. There is no recourse. Bitcoin can go to $1. You see, Bitcoin can literally go to 1 penny. The debt doesn't have. There's no call feature, and so it's like basically someone loans you billions of dollars, and you agree that in 5 years you will either pay them back in cash or in stock. But you know what happened is if Bitcoin crashed by 75%, the stock would trade down. We would just pay off the debt with stock. So the risk isn't in the debt so much as it's in the equity. But the point, and the people are like, oh, well, that makes the equity more risky. Well, yeah, that's the point. The point is the people buying the equity want the equity to trade down harder than Bitcoin, and they want the equity to trade up harder than Bitcoin. Because some of the people that buy the equity are the convertible arbitrageurs and the options traders. The options trade, like there's a lot of people that want to short the equity. Why do they want to short the equity? Because they're hoping that if Bitcoin trades down, they get a 1.5 boost or a 2 boost. That's what makes it a compelling thing. So if you don't want volatility and leverage, don't buy the equity, right? Buy the bond. And if you want something in the middle, buy Bitcoin if you want to hold a commodity, or buy buy the ETF if you want to hold the security wrapper of the commodity. And everybody's got different risk profiles, so we're just providing people with the kind of risk and reward and volatility that they want.
Trump is not going to sign a presidential decree declaring Bitcoin a strategic asset and just buying it, authorizing the Treasury to buy it without the U.S. Congress. It's just not going to happen. Plus, Trump's going to have a lot to deal with, right? Bitcoin is going to be pushed aside. He needed the support of the crypto people to get elected. He doesn't need you people anymore. He's already in office. So, forget about it. He's going to be facing a falling stock market, recession, maybe a financial crisis. There could be a financial crisis early in Trump's first year. So he's got bigger fish to fry than trying to pay back his donors and voters on Bitcoin by giving them an exit. I think Donald Trump probably figures that he's square, right? He helped get Bitcoin above 100,000 and he gave everybody a chance to sell. All of his donors that gave him big bucks had plenty of opportunity to sell their Bitcoin and cash in on their Donald Trump investment. So he's going to have much bigger problems to deal with than trying to waste time with a strategic Bitcoin reserve. That would only add to America's problem. It would add to inflation, add to the deficit, make the economy weaker, and so we can't afford to do that. So that's not going to happen.
Why inflation works is because wages are sticky, and wages are sticky going up. So in other words, you don't get a wage increase as fast as inflation. And let people closer to the money get more, and they only pay the people at the bottom when they have to. So you could just say inflation equals wage deflation from the same thing. It's both sides of the coin. So prices of goods and services are rising faster than wages. Otherwise it wouldn't work. So, and that's because wages are sticky. So if wages are sticky, and that's a known economic fact, because people don't demand wage increases as fast, and the company's in control, and you can automate their labor, so you can constantly suppress wages through the automation. So if that's true, then if wages are sticky, they're sticky on the opposite as well. So that means your wage wouldn't fall as fast as prices are falling. It's a massive take back of wealth from the extractors of wealth through this monetary system to the producers of wealth.
Wow, breaking news for all of crypto. This is huge. Stay tuned to the end of this video. I'm going to tell you why this is bullish for HBAR and Stellar. Circle, which is the company who created USDC, the stablecoin, has discontinued support for the Tron blockchain. Now, the reason they say they did this is compliance and risk management. I personally believe it's because they know Tron is sketchy. I've never liked Tron. I've never been bullish on Tron. And I do not like Justin Sun, who was the creator of Tron, and he does a lot of shady stuff. However, people are now going to be looking for the next fast blockchain that has USDC stablecoin. Because why the heck would I want to send USDC over the Ethereum network, when I have to pay $5 or $20 or some stupid fee? The benefit in using Tron USDC was that we only had to pay a $1 fee. Now Tron is gone, so people are going to be looking for the next blockchain or project that has USDC on it. Now, Hedera actually has support for USDC still. Also, Algorand, Arbitrum, Avalanche, and all of these that you see have support for it. Unfortunately, people are probably going to go to Solana for that fastest, but hopefully they end up on HBAR and XLM.